Hi friends, good morning everyone. Welcome to my channel. Today our topic is how to write journal entries. What is debit? What is credit? What is double entry system of bookkeeping? What is a personal account? What is a real account? What is a nominal account? How to write journal entries? First of all, what is the procedure while preparing books of accounts? First one is to write journal entries, second one is to prepare ledger, third one is to prepare a trial balance, and fourth one is final accounts, that is trading, P&L and balance sheet. This is the procedure. The first step is to write journal entries. This is the critical item. If we don't know this, we can't move further. To record journal entries, there is a system called double entry system of bookkeeping. What this double entry system of bookkeeping say? For every transaction, there are two aspects, a debit aspect and a credit aspect. Okay, let us see a transaction. I purchased a pen for 10 rupees. This transaction contains two items. First one is pen and the next one is cash, that is 10 rupees. Now, what is the problem is whether I have to debit cash or whether I have to debit pen, whether I have to credit cash or whether I have to credit pen, which one I have to debit, which one I have to credit. This is the problem. Similarly, if we see another example, I made a sale of 10,000 rupees. There are two items. One is sale and another one is cash, that is 10,000. Which one I have to debit, sale or cash? Similarly, which one I have to credit, sale or cash? Which item to debit, which item to credit? This is the essence. For this, there are three golden rules. First one is personal account, second one is real account, and third one is nominal account. Now let us see what is a personal account. Personal account says debit the receiver, credit the giver. This is the rule. Now, what items come under this category? Any person, that may be a natural person or artificial person. What is a natural person? Nothing but Mr. X, Mr. Y, Rama, Krishna, etc. These are all natural persons. What is an artificial person? This is nothing but the name of institutions, firms, companies. Example, Andhra Bank, Axis Bank, LIC, Life Insurance Corporation, similarly Sony Company, Apple Company, all these names come under artificial person names. So, whenever a name of a person appears, we have to apply this personal account rule. What is this? Debit the receiver, credit the giver. For example, say there is Mr. X. What kind of activities he can do? Either he can give something or he receives something. That's it. Okay. So, if he is a receiver, then debit the receiver. If he is a giver, then credit the giver. This is the rule. Second one is real account. This real account says debit what comes in, credit what goes out. This is the rule. Now, what items fall in this category? All properties, stock and cash. These items fall under this category. What are the examples of properties? Land, building, machinery, furniture. Cash we know. What is stock? Stock is nothing but goods we purchased. for doing business. We purchase goods from wholesaler and we sell that in the retail market. For that purpose, we need to purchase some goods. That is nothing but stock. Stock is also a real asset. All these real assets come under real account. Now what is the rule? Debit what comes in, credit what goes out. The next one is nominal account. What is the rule? Debit all expenses and losses. Credit all incomes and gains. What is an expense? What is a loss? Any payment for receiving a benefit to run the business is called expense. For example, I paid salary to receive some service, to run the business, to run the organization. This is called expense. Other examples are rent, payment of electricity bill, etc. Now, what is a loss? This is not a regular business activity. Loss is not similar to expense. It is quite different. For example, I purchased a machinery for my business purpose, for manufacturing something. Because of some problem, I am selling that machinery. I purchased at 5 lakh rupees. Now I am selling at 1 lakh rupee. What is the loss? 4 lakh rupees. This 4 lakh is called loss. This is not a general business activity. Here we lost money without receiving any benefit. This is called loss. Hope you understood the difference between expense and loss. Next one. Credit all incomes and gains. What is income? What is a gain? If we receive any amount because of regular business activities, it is called income. Example is sales. Sales is a regular business activity. So any amount from sale is income. Now what is a gain? Same example as before. If we sell a machinery for 5 lakh which was purchased for 4 lakh, there is a gain of 1 lakh rupees. Is it a regular business activity? Selling machinery? No. So this is the difference between income and gain. So the rule is debit all expenses and losses, credit all incomes and gains. Now let us see all these three rules. First one is personal account, debit the receiver, credit the giver. Second one is real account, debit what comes in, credit what goes out. And third one is nominal account, debit all expenses and losses, credit all incomes and gains. Now we have seen what kind of items fall under the category of personal account and what kind of items fall under the category of real account and what kind of items fall under the category of nominal account. Let's start to write journal entries to some transactions. I won't appear on the screen because the entire picture won't fit on the screen well. Okay, please listen carefully. Students, before moving to journal entries, I want to explain about purchase of goods and sale of goods because students get confused here. There are differences of opinion and there are arguments that purchase of goods and sale of goods belongs to real account, and some argue that purchase of goods and sale of goods are related to nominal account. Either you use nominal account rule or you use real account rule, you will get the same entry. There is no problem in that, so don't get confused. The first transaction is amount introduced in the business rupees 50,000. What are the two aspects? One is cash and other one is capital. Cash came into the business. As per real account rule, debit what comes in. So we have to debit cash account. And next one is capital. capital belongs to personal account. How is that possible? Who brought capital? Owner brought capital. So behind capital there is owner. Capital is representing owner. So capital is a representative personal account. As per personal account rule, we have to credit the giver. Indirectly owner is giving that, but we are mentioning that in the name of capital. So credit capital account. The entry becomes cash account debtor to capital account 50,000 50,000. Hope you understood this. The second transaction is goods purchased on credit from Mohan rupees 5,000. What are the two aspects? First one is goods purchased, that is goods came into the business, and second one is Mohan. Some students get confused. Sir, there is 5,000, so there may be cash aspect also. See my dear students, this is a credit transaction, so you may see rupees 5,000 in the transaction, but no one gave cash and no one received cash. So the two aspects in this transaction are only goods purchased and Mohan. So Mohan is a person. As per personal account rule, credit the giver. Mohan gave us goods, so we have to credit Mohan account. And as per real account rule, debit what comes in. Goods is a real account, so we have to debit goods purchased or purchases account. The entry becomes like this: purchase account debtor 5,000 to Mohan 5,000. The third transaction is furniture purchased for cash rupees 10,000. What are the two aspects? First one is furniture and second one is cash. These two items belongs to real account. So debit what comes in? Furniture came in. So furniture account debtor to credit what goes out? Cash went out. So credit cash account. The entry becomes furniture account debtor 10,000 to cash account 10,000. The fourth transaction is goods sold on credit to Dev rupees 1600. What are the two aspects? Goods went out. So goods is one aspect and next one is Dev. This is also a credit transaction. So no money went out or came into the business. So the two aspects are goods and Dev. As per personal account rule, debit the receiver. Here Dev is the receiver. So Dev account debtor to sales. As per real account rule, debit what comes in, credit what goes out. Goods are going out, so we have to record sales in the credit. The entry becomes Dev account debtor 1600 to sales 1600. The fifth transaction is goods purchased for cash rupees 4,500. What are the two aspects here? Goods came into the business, cash went out of the business. These are the two aspects. Both belongs to real account. So as per real account rule, debit what comes in, credit what goes out. Goods came in, so goods account debtor to cash account. The entry is goods account debtor 4,500 to cash account 4,500. Okay, till now we completed 5 journal entries. Hope you are understanding what I am explaining. There are 6 more journal entries. Okay, let's continue. The sixth transaction is goods sold for cash rupees 2500. What are the two aspects here? First one is goods went out. So goods is one aspect. Cash came into the business. Cash is second aspect. So as per real account rule, cash account debtor to sales account, because debit what comes in, what came into the business, cash. Credit what goes out, what went out of the business, goods, that is in the form of sales. So credit sales account. The seventh transaction is rent paid to landlord rupees 3000. What are the aspects in this transaction? First one is rent paid, and second one is cash rupees 3000 went out of the business. Rent is an expense, so as per nominal account rule, debit all expenses and losses. So rent account debtor 3000. Cash is a real asset, it belongs to real account. Cash went out of the business. So as per real account rule, credit what goes out? Credit the cash account. The entry becomes rent account debtor 3000 to cash account 3000 rupees. Hope you understood. The eighth transaction is commission received in cash rupees 2000. What are the two aspects? One is commission and the other one is cash. Cash is a real asset. So as per real account rule, debit what comes in? Cash came in. Now commission received is an income. So as per nominal account rule, credit all incomes and gains. Commission is an income. So as per nominal account rule, credit all incomes and gains. So we have to credit the commission account. Entry becomes cash account debtor 2000 to commission account 2000. The ninth transaction is cash deposited into bank rupees 5000. What are the two aspects? Cash went out of the bank and bank received our cash. So the two aspects are cash and bank. Bank is an artificial person. So as per personal account rule, debit the receiver. Bank received our amount. So debit bank account. Next, cash went out of the business. Cash is a real asset as per real account rule. Credit what goes out. So credit cash account. The entry becomes bank account debtor 5000 to cash account 5000 rupees. The 10th transaction is cash withdrawn from bank for office use rupees 2000. What are the two aspects? One is cash and second one is bank. Bank is giving us and cash is coming into the business. Bank is an artificial person. As per personal account rule, credit the giver. So we have to credit bank account. And cash is a real asset. It belongs to real account. As per real account rule, debit what comes in? Cash is coming into the business. So cash account debtor 2000 to bank account 2000 is the entry. The 11th transaction is cash withdrawn by proprietor for personal use 8000 rupees. Now what are the two aspects? Cash and drawings. Cash is going out of the business. So as per real account rule, we have to credit the cash account. Debit what comes in, credit what goes out. Cash is going out, so we are crediting the cash account. Now what about debit? The owner is withdrawing cash for his personal use, that is drawings. Now to which account this drawings belongs to? Drawings belongs to personal account. Why, sir? Because behind drawings there is a person, that is the proprietor, the owner. So as per personal account rule, debit the receiver. So we have to debit drawings account. If you remember the first transaction, that is capital introduced in the business. The last transaction, drawings by the owner. In these two cases, we are not mentioning the name of owner in the books because we should not mention the name of the owner in his own books. So we are not mentioning his name directly in his own books, and we are mentioning as capital when he introduced money, and we are mentioning as drawings when he withdraw money for his personal use. Okay, these are the journal entries, and we have seen what is a personal account, real account, nominal account. Hope you understood this topic. If there are any doubts, please leave in the comment section. If you like the video, please give a like. Please share the video and don't forget to subscribe. If you hit the bell icon, you will get notified whenever I publish a new video. This is for today. Thank you for watching. Let's meet in the next video. Till then, bye.